and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me today is Soumit Sarkar. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, you will get a chance to connect with our viewers live on a WhatsApp number that will be flashing on your screen. And on to the Buy Now, Sell Now lens today, we're going to be talking about the AMC counters and why they are in focus, and some of the top recommendations that will be coming from our experts. But before that, let's have a look at what the markets are up to. So a good recovery from the day's lowest point is what we have seen, at least for the Nifty, and for the past half an hour or so, Nifty is actually trading with no major movements on either side. 75 points of cut is what we are witnessing, and all thanks to the weak global cues indeed and the continuous FII selling. On the flip side, if you look at the Bank Nifty index, there too we have seen some bit of a recovery. 240 points of cut is what we are still witnessing on this index, and a lot of stock specific action today, and the broader markets are also supportive because on NSE more than 1500 counters are seen to be advancing as of now. Let's have a look at what the stock-specific action is what we are witnessing. ONGC is the top gainer in Nifty 50 today. Eicher Motors is also having some smart gains, 3% uptick in this particular counter. BPCL as well as some of the other OMCs are also seen to be buzzing. On the flip side, LTI Mindtree, after the management rejigs, that counter is down about 3%. IndusInd Bank, Infosys and even Bajaj Twins are seen to be under pressure. So a couple of heavyweights are like Bajaj Twins, Infosys, as well as no major support coming in from HDFC as well as Reliance is what keeping the markets at the lower levels. But other than that, some of the sectors and especially autos is looking in the top gear in today's trading session. But with this, viewers, let's move forward and on to the Buy Now, Sell Now lens. Let's shift focus to the AMC space because Jio Financials has signed a JV with BlackRock for wealth management and broking. And JP Morgan, on the other hand, has upgraded HDFC AMC to overweight. Now, how is the AMC shaping up and who will emerge as the sector leader? Sharad Dubey is joining us to give us all those details. Take it away, Sharad.
A lot of action coming in the AMC space, and a larger player like Jio Financial Services, second JV they are having with BlackRock, and this time it's for the wealth management and the broking business. Earlier this was there for the overall mutual fund business. Now what impact is happening for the AMC players? Of course, it's an initial stage, it's a nascent stage where Jio Financial Services is announcing larger JVs, and BlackRock itself is the world's largest asset manager with almost $10 trillion of assets they are holding. Now the stocks have actually run up over the last 2 to 3 weeks. There were foreign upgrades also coming in when it comes to the wealth management stocks and even certain brokerage names. Now the yield pressure is still there in the mutual fund industry, but with the advent of Jio Financial Services, you can expect that more distribution channels will be opening up, and also importantly there might be important job shifts, or you could say attritions, happening at the top level as well. That's what our channel checks suggest, and we can expect more of this attrition, especially in the AMC, in the wealth management space. Also importantly, JP Morgan has come out with an upgrade with HDFC AMC in focus. They have upgraded it to overweight from the neutral rating, and the target price has hiked from 3,500 to 4,450 rupees per share. And the market share overall has improved for HDFC, which will also translate into a better margin performance. Still, the benefits of merger is still expected to flow, and it has not kicked in yet, and the core EBIT margin expansion is expected to be holding steady due to a better product mix. And lastly, the regulatory overhang which is there for most of the AMCs, that also seems abated as well.
Well, thank you so much, Sharad, for getting us all those details. So indeed, all these AMC counters are buzzing in today's trading session. And with this, let's get the expert view on this one and any of the top recommendations by them from this particular sector. Let's understand that from them, and let me welcome Rajesh Agarwal on the fundamental side, as well as Kunal Bothra is joining us live to help us on the technical front. A very good morning to both of you. And Rajesh, coming to you first, what's your take on the AMC space? Finally, this space is looking for a good upside because HDFC AMC got an upgrade from JP Morgan, and even we are seeing a good collaboration between BlackRock and Jio Financials in this particular space. How are you witnessing the kind of competition that is kicking in, and do you believe with the increase in the market size there is more headroom for the valuation to move ahead?
Good morning, Srishti. Good morning, Soumit. Good morning, Kunal. You said it right. AMC stocks are going to see new highs, but we should not forget that it has already seen a phenomenal run in the last 1 year or so. Almost all the stocks, be it ADFC, AMC, be it Nippon, be it UTI, AMC, everybody has run up quite a lot. Even the smaller AMCs like ATSL, they have also run up quite a lot. But still, there are a lot of headrooms going ahead because of the fact that equity market is buzzing. We are talking of 10 trillion economy. We should not forget that SIPs has grown up to 90,200 odd crores as per recent data, and it's going to go up even further, seeing the kind of investor education being done by the regulators, be it SEBI, be it AMFI, and all those things. So I think yes, this entire sector is on for a roll, but we should not forget with the entry of Geo and there is disruption going to happen in the entire space as such, be it AMC business, be it wealth or broking, which they have made a JV yesterday. So we have to look out for this. A lot of attrition, a lot of disruption, maybe brokerages going down. All these things are going to happen in the next 2-3 years, we believe. And as far as top picks in this sector is concerned, I think Geo would be the first pick, which I have been very bullish since the day of the listing. And we still feel that Geo can be a multi-bagger of sort if things go right in its way as per planned. They have a huge database of telecom and retail with them, so they can use that. That the third largest financial services company as on date. They might attract new investor and strategic partners, which again would do value unlocking. And they intend to move into life, non-life, general insurance business. And yesterday we have seen wealth management and broking being done. They have 6.1% shares of Reliance as a treasury holding. That again is a value enhancer. And not to forget that they have Chiranjit Singh Atra, former SBI, Hitesh Shetty, former ICICI, and Mr. Kamath at the helm. So everything is in favor of Geo, and Geo would be the top pick. And the second one in this space, if somebody wants, would be Nippon India Financial Service.
That's the word coming in from Rajesh. Geo Financial could be a multi-bagger. He also likes Nippon Life AMC. But Kunal, what's your view when it comes to this wealth management and the broking space? Any interesting names on charts that you names that you find interesting on charts like 361, Nuvama Wealth, Anand Rathi Wealth? Any picks from that?
So yeah, I think Nuvama is something which is attractive. In fact, I've been tracking the stock of late. The history, of course, is limited. For the price histories are limited for the stock, but I think it's been more of a consistent trend for Nuvama. That's looking very attractive. Even Anand Rathi stock, I think, has been one of the few names which has been moving up steadily higher. Lesser degree of volatility for the stock, and I think greater degree of stability for the price trend. So that's also another space stock from the space which looks attractive. Geo Finance, I would also agree that the stock largely is now showing signs of strength. So from an earlier base of 220 to 25 towards 250 to 55, which is the trigger point of a breakout, to now comfortably above the 300 plus mark, 350 plus levels. So I believe now the support for the stock is much higher. 320 plus is a key short to medium term support for Geo Financial on the charts. That's looking attractive. And from the other AMC names, I would probably agree with the likes of Nippon Asset Management, etc. But even HDFC AMC is something which has started to go into a breakout mode. The stock has been consistently showing signs of strength. If I'm not wrong, almost 4 or 5 straight quarters of price uptrend for HDFC AMC. The stock has done reasonably well from 2023 lows of 1700 or 1800 odd levels to now 3600, 3700 plus mark. So that's also another name which traders could look at from a medium to long term play.
Right, so those are the takes coming in from our experts and their top recommendations from the ANC space. So viewers, do look out for this one. But with this, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned and start writing to us. Welcome back to Buy Now Sell Now, and viewers, let's kickstart taking all your queries in the show. Remember, you can connect with us live on a WhatsApp number that will be flashing on the screen, as well as you can also write to us on our social media pages, that is the Facebook as well as X pages, and we'll try to take as many queries as possible. And a lot of queries have already started pouring in and to answer and help you better Today we have Rajesh Agarwal as well as Kunal Bothra live on the show. So let's kick start, and the first query that I have is coming on Infibeam Avenues. Kunal, I'm not sure whether you tracked this one or not, but a viewer named Venkat Ramani from Bangalore is holding the shares from a price of close to 38 rupees, holding for the past 12 months. So on charts, do you believe that is there a case to continue holding this loss-making counter for him or move out?
I would suggest to exit the stock now. I understand that at one point of time the stock may have looked attractive in terms of a trading kind of a bet, but these are stocks which you should typically look out for only trading, not for investing or making it part of your core portfolios. And given the way the markets are poised, there are a lot many larger cap names which are already available at a significant discount for themselves. So it makes a lot of sense to try and exit these kind of names and then look out for stocks which are more solid and larger cap names which are available at good discounts or good corrective phases for themselves. So that would be my strategy.
Well, the next query is from Mohit from Ludhiana, and it's for you, Rajesh. He has around 1,000 shares of IDFC First Bank, bought at a price of 27 rupees per share. He can continue to hold these stocks for 2 years, but what would be your view here?
Continue to hold IDFC First Bank. The numbers have been quite good in the last 2-3 quarters. They have been improving, and AUMs have been improving. The balance sheet size has increased, and with the merger almost getting the approval, I think it's just a matter of time when it starts performing. Rather, I would say that if somebody has a longer term horizon and he wants to can switch from IDFC First Bank to IDFC Limited. That would be giving better opportunities rather than going for IDFC First Bank. But still, IDFC First Bank is doing very well. One can continue to hold.
That's a hold coming in on IDFC First Bank. We're moving on to the next one. And Kunal, what is the outlook on HEG? A viewer named Rajendra Tyagi is holding 100 shares from a price of 2,353 rupees. Any targets he can look out maybe for the next 6 months to 1 year?
See, I think I've been recommending this stock as well as graphite over the last few weeks, expecting the stock to get into a breakout from sub 2,000 levels specifically for HEG. Now the stock has done reasonably well. Now if you look at the next 6 months, then there could be a possibility that the stock may go into a mild corrective phase and then again a resumption of uptrend. So with a 6-month kind of a time horizon and expecting the stock that maybe it could dip first and then go into a breakout mode, you can probably keep a target range closer to 2,750 to 800 for HEG. So a very good medium term chart, but maybe slightly overbought in terms of the very short term or the daily time frame charts.
Okay, well, the next query is from Mr. Singh from Pune, and Rajesh, he wants to know your fundamental view on Max Estates. He can hold the counter for 2 to 3 years view. So, any view on Max Estate stock?
They're doing very well. The old age thing and the other real estate business is doing well. But I think a better bet in this entire space would be a Godrej Properties or a Century Textile, which give more opportunities rather than going for Max Estate for a longer term horizon.
All right, that's the take coming in on Godrej Properties. Moving on to the next one, and this query is on Cummins. Kunal, once again a short-term query coming in from Umesh Gupta from Vadodara, holding 200 shares from a price of 1,786 rupees. Is this the right time to actually book out profits or book some partial profits or continue to hold on?
See, I would suggest to continue to hold on, and congratulations to you because I think you've bought this at the cusp of a strong breakout for Cummins, because that was the point around the 1800 levels where the stock managed to come out of a major multi-month, multi-year kind of resistance. Now the stock seemingly has almost given returns of 50% plus, but I would sense that there should be more steam on the upside. The stock has just confirmed a breakout, as I said, on the monthly time frame chart. So if your time horizon is long term, I would suggest to hold on to the stock. And you would probably get those phases of consolidation in between or mild corrections, like a 5% trading range, for example, could be a good range where you may look to further accumulate the stock if in case you look to accumulate or add further for a stock like Cummins.
Well, the next query is from Vivek, and it's on Dredging Corp. He has around 300 shares bought at a price of 430. Kunal, what would be your view on Dredging Corp for the next 3 to 6 months?
See, I think, you should be looking to book out profits on the stock. I understand that it's been a very good uptrend for the stock price, but the volumes have started to ebb off for, Dredging Corp. So that could probably be an indication that maybe the stock would get into a time-wise consolidation or maybe a price-wise correction. So that could be a better zone where you may look to rebuy. So I think I would probably recommend to try and book profits. Start to book profits at current levels and then keep booking out profits on slight higher trends for dredging corp. And on the corrective phases, say in case if the stock comes back to 750 mark or 700 levels, that could be a point where you may look to reinitiate a buy.
Rajesh, coming to you for the next query, I'm not sure whether you tracked this company or not, but a viewer named Dharam Raj, who is a senior citizen holding SPEL Semiconductors. The buy price out here is 68 rupees. Any view on this particular counter is the first query, and the second one is on Eicher Motors. He's holding the stock from a price of 3,000 rupees. What will be the view on this counter as well?
The SPL semiconductor, the numbers are pretty bad. It has been running up quite a lot in the recent past because of the name semiconductor, and everybody is going gung-ho about semiconductor industry as a whole. I think if you are sitting on a good amount of profit, you should come out of these kind of counters, as Kunal said in the beginning, that these kind of counters are for trading purpose, not for core portfolio. So one should come out of these stocks and maybe we switch to some other better names. And as far as Eicher Motors is concerned, the company is very good for long-term portfolio. One should continue to hold. The CV business is doing well. Even the RE business have shown good traction with the new launches and all. We believe that Eicher is going to give better numbers in coming days. And we have a target of around 5,000 rupees in the next 1 year.
The next query is from Sudha from Mumbai, and she has bought Force Motors shares at a level of 7,150. She continues to hold. Kunal, whether she should book profits right now or continue to hold this counter?
See, I would suggest largely to hold on to the stock, but it's just that on the daily time frame chart and the way the stock has run up in the last I think few weeks or so, the indicators are slightly overbought. So by the face of it, it looks like that the stock still looks attractive on the longer term play, but because the indicators are oversold, I would suggest to that maybe book out 50% profits from your holdings. In case if the short term correction plays out, then you can look to buy back these 50% quantity which you sell at higher levels at much cheaper prices for the stock, and then let the medium term trend play out where the stock may come back post a slight corrective phase. So I would suggest that you hold on to it from a longer term play, but from a short term wise, if you want to do that juggle, then you can probably look at booking 50% profits at current levels, and then you look to buy this quantity back again on corrective phases.
All right, Kunal, since you have been bullish in talking about Anant Raj, so Usha from Bangalore is already holding the stock from a price of 300 to 312 rupees, sitting at a profits in this one. But for the next 3 months, what are the targets that she should be looking at?
See, from the next 3 months, I'm not sure that whether the stock would get into another stage of a, like the last 1.5 odd year of a stupendous rally for itself. So I think it's better that since you have a short-term time frame, and you've bought at elevated levels of 300 plus for the stock, I think it's a good strategy where you can look to book out profits over here and then switch on to some other theme where you are comfortable holding on to the stocks from a time frame of at least 1.5 to 2 years plus, because there could be a possibility that the themes which have run up in the last 1.5 odd year, the likes of real estate, etc., they could get into a phase of a pause for themselves. So I'm not bearish on the counter on the sector, but then possibly in the next 1 to 3 months, you may see more of time-wise consolidation rather than a very speedy or a spiky uptrend for these names.
Well, the next query is from GK Sharma, and it's an important one because the company is also launching its FPO, in fact, India's largest FPO, that is Vodafone Idea. Rajesh, what would be your view on Vodafone Idea for long term? He has bought shares at around 12.5 rupees per share.
I think around 13, 14 odd rupees in the medium term, one should try to book out profit. 18,000 odd crore FPO, which their company has announced. I think that would be totally subscribed, but with the kind of debt and with the kind of capex looking forward for 5G and all, I think it would be a difficult task for the company. So it's better to move to some other better telecom names like Reliance or Bharti Airtel rather than sticking to Vodafone Idea.
Right, moving on, and Kunal, any view on Hindustan Oil Exploration? Dasari Radhi is holding the stock from a price of 205 rupees. Can he continue holding this one?
Yeah, you can continue to hold on to the stock, high beta of course, but then I think from a short-term play, it looks like that the stock could retest the February highs of around 212 to 215 mark. So assuming if it's a short-term play, then Hindustan Oil Exploration is something which you can hold for a potential near-term target of 212 to 15 range. And in case if your time horizon is say 3 months to 6 months or higher, then you can look out for targets of 240 plus also.
Well, the next query is from Dilesh Joshi. He's from Mumbai. He's holding around 100 shares of Infosys, bought at a price of 742 per share. Rajesh, he wants your advice whether should he continue to hold Infosys for long term or should he switch to some other counter?
Add from our side, somebody holding should continue to hold. The numbers are very promising. The company is doing well. In the new age business also, it has got good orders. In the third quarter numbers, we have seen order flows being good. Attrition has been taken care of. And the valuation are extremely attractive, I would say. Medium-term target of 1800 could be kept in the stock for the next 9 to 12 months. But for a longer-term portfolio, one can continue to hold.
All right, that's a hold coming in on Infosys for the long-term basis. But moving on, and Rajesh, any advice on Shilpa Medicare? Subramaniam from Chennai wants to know the outlook of this counter, and is this a good buy at current market price? We have seen a good momentum in the stock of late. In the past 6 months, see the run-up of almost 50%. Do you like this counter?
So one should continue to hold, and somebody intending to buy can buy their stock. Maybe because of market correction, it might correct for some amount, like maybe 480, 500 levels would be a good level to enter. But for a longer term horizon, one can continue to hold. It's a good play on API and oncology segment. They have some very good products into that. Some ANDAs has been filed. And last week when there was a QIP, we have seen some good names entering the stock. So I think one should buy the stock.
Next query is from Mahalakshmi from Hyderabad. Now she wants to invest 1 lakh rupees each in Exide and Amara Raja, and she has a view for the next 12 to 18 months. Rajesh, would it be a good time to buy these counters right now, given the fact that we have seen a sharp run up in both the counters in last few days?
Buy both the stocks in the same segment. I would say buy any one of them. Both are doing very well. Both have got OEM tie-ups with some of the best names in the automobile industry. We have seen auto numbers doing better and better every day. Even in the replacement market, things are looking pretty well because after the implementation of GST and all, organized players are doing well. And yesterday we had some news about Hyundai and Kia having a tie-up with Exide for EV space. I think Exide is a better placed stock at this point of time on valuation parameters. Although at around 35 times forward P, valuation looks somehow stretched, but for a longer term portfolio, any dip should be taken as an opportunity to buy. For Amara Raja, at least a 10% correction from the current market price would be a decent level to enter.
Wait for some correction in Amara Raja. Excite, the confidence continues, and that's the take on the EV battery manufacturers. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries.
Welcome back. You're watching Buy Now, Sell Now. Let's get on with the queries. The next query is from V. Murli from Bangalore, and it's for you, Rajesh. He wants to know whether could he buy the BSE listed company International Combustion India Limited. Are you tracking this counter?
I'm sorry, we don't track this counter.
Okay, so his next query is actually on, he wants to know whether can he buy Coforge after the drastic fall that we have seen currently in the share prices.
I think IT companies are doing well. Coforge saw a drastic fall because of various factors. One, the numbers were not that good. The second, it has run up quite a lot in the recent past. But if somebody has a time horizon of 12 to 18 months, I think one can go long on Coforge. But I would like to reiterate that at this point of time in this space, we have likes of Infosys, which are trading at a very decent valuations. And why go for second-hand counters? Go for Infosys rather if you want. Otherwise, you can buy Coforge also. It's a good at this price point.
All right, Kunal, the next query is specifically for you, coming in from Sunny, and he's holding shares of IRFC, 500 in quantity, bought from at a price of 100 rupees. Can he continue to hold this counter and add more at current market price? Is the first query, and he also wants an advice on HUL. Is that a good buy at current market price?
Yeah, I would recommend to hold on to IRFC, not to add at current levels, because of the way the stock is poised. Could be a potential 2-3 months of more consolidation for the stock. So maybe the timing could be a bit better for the stock. So I think in that aspect you can just hold on to the quantity currently which you bought at lower levels. For HUL, in fact, that could be a very good time where you can look to start buying or adding on to the stock, because it seems like in the last 3-4 days there has been some huge churn in volumes for the stock. And apparently the stock has today managed to show signs of recovery from the intraday low. So maybe there could be a possibility that a major bottom could be getting in place for HUL. So that could be a very good contra bet at current levels.
The next query is from Rima from Pune, and she's holding around 100 shares of JNA Axis, bought at a price of 488. Currently, she's sitting on a loss. Rajesh, should she continue to hold this counter or just exit?
Continue to hold. It's one of the better auto ancillary company in the axle space, I would say. They supply axles to larger trucks and all. There were some bad times in the recent past, in the last 1 year or so. The numbers have been not that great. But now the company started picking up. I think one can have a target of around 490, 500 odd rupees in the next 1 year. Continue to hold.
All right. Once again, a query for you, Rajesh, coming in from Krish, and he wants your view on PI Industries since he is holding 75 shares and his buy price is 3,500 rupees. Is this a good stock to hold for the long term? And in the long term, any targets to look out for as well?
Yes, one can continue to hold. There were some issues in the recent past because of the Japanese chemical being launched. But I think these things are going to be taken care of. And with the government's focus on rural development and all, these agrochemical companies are going to do well. Valuations are decent, I would say, if not attractive. Attractive, it would be around 3,300 odd levels when somebody can re-enter or buy new. But somebody holding can continue to hold.
Next query is from Vijay from Kerala. He has around 1,000 shares of MCX, bought at a price of 3,960. Currently under huge loss. He's asking Kunal whether should he continue to hold this counter or just book its losses.
No, I think you can continue to hold on. Yes, the stock is very high beta in nature, but I think looking at the last 3 weeks of uptrend from March lows of 3,100 odd for MCX towards the point when the stock had almost tested the 4,000 mark, this could be a corrective wave for the stock price. But if the trends and the breakouts are something to go by, then we will probably expect that post this corrective wave which gets over for the stock, you may see a resumption of uptrend and a breakout potentially above the 4,000 level. So if you have that risk appetite as such, then I would suggest you to hold on to the stock.
Okay, that's a hold coming in on MCX. But another query or way, Kunal, is from Namita Singh, and she's actually holding a couple of names. The first one is Orient Cement, bought at a price of 245 rupees. Other one is RCF, buying price is 168 rupees. And even Texmeco Rail, if we can accommodate, at a price of 176 rupees. She's been holding all of these three names, but at this point in time, do you believe any of the stock would need a sell or an exit at this point? Needs a 3 to 6 month technical view.
So I think you should not be in a hurry to try and sell or exit these names. So yes, I think these stocks are going through their corrective wave. There is not any major, there is no major change of pattern, change of trend for these stocks. I think that's where I would believe that maybe say over the next 1 week or so, once the market gets into a bit of fair stability across the globe and for our markets also, then you may probably see these stocks moving up higher. You've already seen, for example, Orient Cement falling off from 80-85 levels to currently now 200 approximately where the stock is trading. So which means that a fair degree of correction has already happened for the stock in the last 3 months. Even for the likes of RCF, the stock has corrected from 180 levels to 120 approximately. So that seems to be a very strong support zone for the stock over the medium term. And so would be the case with Texmaco Rail also. The stock has already corrected from 220 levels to approximately 145. So currently at 167, which means you are at the lower end of the curve in terms of the correction for these prices. So I would not suggest an exit into these stocks at current levels. Maybe once the bounce shapes up, say on an average if these stocks rally by 10% to 15% from current levels, that could be a good point where you may look to consider booking out profits.
The next query is from Divya, and it's for you, Rajesh. She wants to invest in these stocks from 3 years perspective. The stocks are JB Pharma, Shilpa Medicare, Som Distilleries, Newgen Software and IFL Finance. Any stocks that you would recommend out of these stocks for the next 3 years?
JV Chemical is good. The company is doing well. They have come out with their Russian business and now the portfolio is good. I think one can buy their stock. And the other one, what you said?
There were
IFL.
multiple names. There was JB Chemical, Shilpa Medicare, IFL Finance, and as well as, well, I'm just searching again, just a minute. Som Distilleries and Newgen Software.
Out of these four, I think JB Chemical and Shilpa, these are the two companies one can have a look at. Shilpa, we have discussed just a few minutes back. Just to reiterate, the company is doing well. They are into API and oncology. They have some good names in the recent QIP which they have done. I think longer term looks good. So one can invest in JB and Shilpa and avoid the other two, the Som Distilleries and IFL.
All right, that's the take on a lot of these queries. The next query that I have, Kunal, is coming from Kiran. She says that she is one of your fans as well, and she wants a 3 to 6 months view on CESE, bought 1,000 shares at a price of 123 rupees.
So thank you so much for that. First of all, on CESE, I'm very bullish on the medium to long-term prospects. I think the stock on the long-term charts, and specifically when I look at this over the last 6-7 years, I think if I'm not wrong, around 2017-18 odd levels is where the stock had entered into a major year of consolidation. It's broken out of those levels around the 100 mark. So, and what we are talking of is almost like a 50-60 pointer consolidation for the stock, which in percentage terms is 60% approximately for the stock, or maybe higher than that. Now, when you see such kind of multi-year consolidations happening into stock prices, we tend to look out for multi-years of uptrend. So right now we've just seen 3 quarters or 2.5 quarters of uptrend for the stock shaping up. I would believe that this could be a big multi-year uptrending cycle for CESE. I think in that aspect, and if you have that risk appetite as well as a time frame, you should definitely look to hold on.
The next query is from Kumar from Mysore, and it's for you, Kunal. He wants to know the short-term target on Fortis Malar. Have you tracked this counter?
Not really. I'll give it a skip.
Okay.
Right, that's a skip on Fortis. But moving on, Apar Industries, Rajesh, Prosenjit Ghosh wants to know, is this a good stock to enter for a long-term investment?
The valuations are quite stretched. It has run up quite a lot in the last 6 months or 1 year or so. I think one should wait for some amount of correction to enter into the stock. There are better choices available in the market. Maybe a DFC Bank or a Reliance would be a better choice at this point of time.
Query is from Anant Nayak from Bangalore. Kunal, he wants to buy GM breweries at current prices for short term.
So I would recommend maybe, so this could be a good bet, but I think there could be another name which looks attractive to me on technical charts. I would recommend Som Distilleries. That's a stock which is trading around 300 levels. It's gone through almost 5 painful months of correction from I think 400 levels to 270 or 250 approximately. I'm not sure of the exact bottom which was made for the stock price, but it's gone through that 40% kind of correction and is now seemingly coming back into a breakout mode. I strongly believe that in this leg of breakout, the stock should be able to cross about the 400 levels plus, at least if you have a time frame of 6 months or more than that for the stock. And since you're looking at the liquor space, I would probably recommend this could be a better alternative purely in terms of the charts.
Right. Rajesh, the next query is coming from Jay Krishnan, and he has actually 4 counters where he's confused in which 2 of them he can actually go and make a fresh investment. He has stocks like BSC, Tata Motors, Tata Elxsi, as well as Hindustan Copper in mind. So out of these 4, any 2 stocks that you would like to pick?
One can continue to hold with all 4 of them. And for new money to be put in, I think BSE and Tata Motors are the 2 stocks where one can go long at this point of time. BSE, the numbers have been pretty good in the last 2 quarters. Their future and option segments is doing well. They have launched new products, new settlement cycles and all that. And with NSE IPO in the offering, I think there would be some valuation re-rating too going forward. So I think one can invest in BSE, and as far as Tata Motors is concerned, the debt is going to go down, not only in the consolidated phase, but we have seen JLR debt also going down. JLR numbers have been pretty good. Yes, it has run up quite a lot, but still there is some scope considering the fact that new launches have been taking well. They are the first mover in EV space, and that has been doing very well. Demerger has been announced. So I think one can go along on Tata Motors and BSE. for a time horizon of maybe 9 to 12 months, considering upside of 15 to 20% from the current market price.
Next query is from Rahul Reddy, and it's for you, Rajesh. Again, he's a long-term investor. For 3 years, he has been holding on to ITC and Ujjivan Small Finance Bank. He has around 135 shares of ITC and 300 shares of Ujjivan Small Finance Bank. He's at a profit in both these counters. Should he hold both the counters or add more?
See, I think usually one should book profit. We are not that bullish on small finance banking as a space. If somebody wants to be in small finance, I think AU is the best bank out of these, but I think still is in a profit. One should book profit. And just to maybe have larger bank at this point of time, HDFC is trading at a very attractive valuation. And as far as ITC is concerned, I have been very bullish in the stock from the levels of 150 odd levels, and it has already 3 times from those levels. So still, we are very bullish on this stock, considering the fact that it's a debt-free balance sheet. The products has been doing well. FMCG has gained market share. They're going for new launches. Companies doing extremely well, and with the balance sheet very strong. I think ITC share should be continued to hold, and any dips should be taken as an opportunity to add.
All right, moving on then, and the next query is for you, Kunal, coming in from Jay Prakash, and he's holding 3 shares of Page Industries from the last 2 years, and his buy price is 42,000 rupees, and we can see that he's still at a loss in this one. So at this point, should he continue to hold on or exit this particular counter?
See, I think you should hold on to the stock, and I understand that it's gone through a painful phase of correction in the last 1.5 or 2 years. But looking at the charts, it seems like that the stock is now coming into an oversold territory on the monthly time frame. So that could probably indicate that maybe in the next 1 to 3 months, or say a couple of months post that also, the stock may eventually form a major bottom for itself, and that could be a point where you may see a strong reselective phase coming back into Page Industries. So typically these are the kind of zones where we generally advise to try and accumulate stocks if in case you are looking to buy these stocks on stronger phases of correction, or if you're holding, then you can probably look to even add further.
Well, thank you, Kunal, for that. With that, let's step into a short break and we'll address more investor queries post that.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries. And Rajesh, the next query that I have is coming from Dr. Sunil Kumar, and he's holding 2 of the large-cap names from quite a good price. 300 shares of Sun Pharma from a price of 770 rupees, and he also has Tata Motors from a price of 550 rupees. So at this point, he's really not looking out to book out profits, but he wants a suggestion that can he go ahead and add more any of these names?
Firstly, congratulations on sitting on such amount of profit, and this shows how long-term investment gives good results. And as far as adding both of them are concerned, I think yes, both of them can be added at this point of time. Sun Pharma, there was some news of US FDA action yesterday and witnessed some amount of pressure, but these are part and parcel of pharma company. They have good product profile. Recently, they have got approval for a acne vulgaris ointment from Australia also. The numbers have been pretty good. One can have a target of 1,800 odd rupees in the next 12 months. And as far as Tata Motors is concerned, just as we discussed some time back, that the debt is going to go down. EV space is doing well. New launches has been taken well. JLR numbers have been good. JLR debt has also gone down. So I think both of the stocks are very good. And if any correction happens in the market, one can add to that.
Well, the next query is from the next query is from Mr. Sambasiva Rao from Vijayawada, and he's holding around 60 shares of Kirloskar Oil Engines, bought at a price of 650. Kunal, he wants to know whether should he book profit or add some more of this counter.
I think you can consider to book profits, but I would not recommend at current levels. Maybe wait out for another 7-8% upside. I think if I'm not wrong, the stock is priced at 888 approximately. Kirloskar Oil Engine, and I would believe that maybe that could be a point where you may look to book profits closer to 950 plus mark.
Right. Kunal, once again coming to you. This query is coming from Krishna from Bangalore, and he's holding Happiest Minds and his buy price is 810 rupees. In the next 3 months, any targets to look out for?
See again, a stock which has fallen down sharply. I remember, I think 2021 odd is where the stock was listed and then moved up hard to 1500 levels from 300, 400 mark, and then it's come back towards a 50% correction from those 1500 levels. So it could be a possibility that the stock may go into another 2-3 months of time-wise consolidation. But it looks like that again, that 750 mark, 700 range is a very strong support zone for the stock. So it all depends on how long you can hold. If you are okay holding on to the stock, say for another 1 year, 1.5 odd year, and assuming if the stock doesn't go below the 700 mark, that could be a stop loss which you can keep and play, then I think you can continue to hold on to the stock.
The next query is from Mr. D. Mazumdar from Odisha, and he's holding around 1000 shares of IEX, bought at a price of 260 for the last 3 years, and he wants to know, Rajesh, whether should he continue to hold this counter or book profits here?
This stock got hit because of government announcement of decoupling and all, but one should not forget the kind of power shortage we are witnessing. The numbers have been pretty good. They have launched new products too. And the volumes have taken up in the last 2-3 months. We have seen the monthly numbers coming in. So I think one should continue to hold this stock with a target of 170 by 180 odd levels in the next 12 months.
Right. Moving on, and Rajesh, any view on Star Cement? Arvind Reddy is actually holding 200 shares from a price of 141 rupees. Can he add more, or good to hold on for the long term?
See, one can continue to hold, but adding at this point would not be suggested because there are better opportunities in the market in the cement space. I think Ultratech in the larger space, or as Birla or Mangalam Cement, there are better choices in the market on valuation parameters, I would say. Star Cement, yes, one can add if it corrects around 10% from the current market price. But at this point of time, you can continue to hold, add on dips.
Query is from Shrikant from Hyderabad. He's holding Birlasoft 200 shares, bought at a price of 460. Kunal, should he book profits or continue to hold this counter?
I think you should look to book profits over here for the stock again, but may not be at current levels, but wait out for a point till say 725 odd levels, where could be a good point for him to consider booking out profits. It's just that because the way the IT stocks are behaving, I would probably expect these stocks to get into a more of price-wise as well as a time-wise correction for themselves.
Also, he's holding 1000 shares of IRDA at 120. Should he continue to hold this one?
I think you should continue to hold on to this one. Seemingly, the stock seems to have found a major support at this 130 mark, where the March correction also ended for the stock, and from there it's gone to a resurrective phase, bounced towards 180 plus levels. So that could be a very good support zone for the stock, and since you've bought at lower levels, I think I would recommend to hold on.
All right, that's a hold coming in on IRDA, and 130 is a good support, so do watch out for that. But with this, let's kickstart all your queries in the rapid fire session. And the first query that I have is coming from Leena from Mumbai, and Kunal, she has actually bought IEX from a price of 140 rupees. Any short-term targets to look out for?
At least 155 to 160 range could be kept as a short-term target range.
The next query is from Thomas George from Kochi. Rajesh, he wants to know which is the better of these two, CG Power or Tube Investment for long term?
Tube Investment for long term is good.
Okay, Kunal, Bhagwan has bought 500 shares of L&T Finance from a price of 143 rupees. What to do in this one?
Hold on to the stock.
Kunal, what would be your view on HEG for the next 6 months?
I think I would probably look out for 750, 800 as a target.
Okay, Rajesh, what's your view on Lakshmi Organics? Poonam from Punjab has bought 250 shares at a price of 283 rupees. What to do in this one? Continue to hold or exit?
The chemicals have bottomed out. I think one should hold.
The next query is from Yamini from Bangalore. Suzlon Energy, Inox India, Cyan DLM. Which of these three would be a good fresh buy for long term, Rajesh?
Inox India.
All right, the next query is on City Union Bank. Rajesh, Anju is holding 1000 shares and buy price is 147 rupees. At what price she should actually look out to exit?
I think around 180 odd levels in the next 1 year is quite possible. One should continue to hold.
The next query is from Rajashekar from Chennai. He's holding 500 shares of Castrol, bought at a price of 224. Should he continue to hold or sell the counter, Kunal?
Continue to hold on.
Okay, Rajesh, Avinash is looking to invest 6 lakh rupees with a 1 to 2 year investment horizon in Tata Technologies as well as DLF. Will that be a good strategy?
Tata Technologies would be a better bet, I would say. DLF, there are risks in real estate sector.
The next query is from Meena from Kochi. Kunal, should she enter Borosil Renewables or Sterling Wilson Solar?
Both of them are attractive. I would recommend to maybe partially do both of these stocks.
All right, Kunal, what's your view on Fine Organics? A viewer named Jai Ram is holding the shares from a price of 4,300 rupees. Long-term investor, what to do?
Hold on, look to add even a few of the other chemical names.
The next query is from Vishwanath Nair from Cochin. He wants to know which is better off, Kolte Patil or Suntec Realty or Indian Hotels or Lemon Tree? Out of these three, four, Kunal.
Tough one, but I think I would probably go with Indian Hotel as well as Kolte Patil out of the 2 names, out of the 4 names.
All right, but with this, viewers, it's time's up in this edition of the Rapid Fire session as well as on the Buy Now Sell Now show. Thank you so much, Kunal and Rajesh, for joining us today and helping all our viewers resolve their stock-related queries. But with this, it's a goodbye from me and Somit and the entire team who put the show together as well. Thank you so much for watching, but don't go anywhere. Markets and Noon will take the action ahead.
If you like this video, then like, share and subscribe to ET Now.